welcome everybody. This is the Thursday evening LiveDemoTrading webinar. Tonight's topic is targets and stops. Of course, we're going to cover a lot of other material, but that'll be a big part of it. All communications and LiveDemoTrading systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Yeah, it was a heck of a beautiful day here. I think it got up to like 74 or 75. I think it was at the mid to upper or middle 70s. Let's get over to screen one. Before we get into the whole topic of targets and stops, I want to show little correlations that are kind of going on right now. Sometimes they're intact, sometimes they aren't. So I want to watch these two together. Here's gold. Stand by 1 second, please. I thought I had that muted. My apologies. Sorry about that. Yeah, you only hardly get any calls all day, and then right you start a webinar, and then somebody decides to call you. It's just unbelievable. But anyway, my apologies on that. Let's get going here. Now, normally these two markets have an inverse correlation to each other, and let's talk about ES and YM first, and then we'll try to work gold in here. Now you see here on the left that, by the way, did everybody see what happened to the markets today? Anybody see how that market ended? Anybody see the Dow close today? Let me show you real quick in case you missed it. Yeah, that's right. 1,190 points down. Yeah, seemed a little soft, yeah, you think? That's the largest drop ever in the history of the Dow Jones Industrial Average. The largest one-day drop ever to close at that level. And I think it's a record for a 5-day drop of 3,213 points. That's not ticks, that's points. Let me show you something real quick, just to give you an idea of what we're talking about here. Here's the Dow. I think late in the morning what happened was it wasn't that long ago. We were up here on pushing 30,000, 28, 29.4. This was a record high back here. Record high, and that was only like, what, 5 days ago? What, a week ago? Yeah, like a week ago. We're up here 29,500, pushing all-time fresh highs on this market. And here we are down at 27,000. Actually, we closed just under 27,000 at 27.5. The last time we were here at this level was all the way over here in September of last year. And then beyond that, you're looking at September all the way back over here to June of last year. I think that was a record percentage drop too, Brian. That's correct. 3,200 points in 5 days because of the coronavirus. Now, what I wanted to show you here, and it's starting to play out, and I wanted to show it, but I didn't. But I'm going to show it right now on how you can use this correlation of YM to ES. And it just happened. I got a little sidetracked there, but it's okay. I can still show it. I want to show the break of one YM consolidated and then finally broke right here. Can you see this right here? Now let's look at the timing on that. Sat here, sat here, sat here, sat here, sat here, 1703. This is 503 my time, and she broke at 1704. Let's come over here to the ES chart. Where was ES at 1704? Well, let's take a look. 1703, 1704. 1703 is way up here. There's a 3 right there. So even though you were above the mid band, could you have shorted this right here? This bar. Could you have shorted that bar right there? Yes. Yes. This was just about to break. Hadn't broken yet on that bar right there when this had broken right here. So this is portending that ES was going to get this breakdown right here, and it did. Now, for those of you in the know, what should gold be doing if ES and YM are heading down? What should gold be doing? Right now, what should gold be? If I pulled a gold chart over right at this very minute, what direction, just a direction, what direction should gold be going right now? Up or down, U or D? Goldie, Goldie, good, good. What's your call, team? What say you? YM and ES, equity markets heading down. Goldie going up. Let's take a look. Here's gold right here. Let's see when 1703, 1704 was on Mr. Goldie Man. Well, I'll be darned. Isn't there a little box right there right now? Right here. Actually, gold broke up at 1701. Gold was the leader here. See that? Now, could it be reversing? Sure. It's after hours. The market can do whatever they want. They're very thinly traded. You know, it wouldn't surprise me if all gold started to drop and the equity started heading back up. Now, if there's no news on the coronavirus, or for some reason overnight there's a little bit of inkling of good news, what do we think might happen to the markets tomorrow? Up or down? What do you think? Okay, come back over here. Let's take a look. So you went from all the way up here, 29,500, 3,200 points. We're all the way down here at 27 and change. Actually, we broke it. We're down here at 25,766 was the actual close. So you're actually, when this thing updates, it's going to be way down here actually. So now you're back at like August last summer prices, all the way back to last March, down in this area right here. Very precipitous sell-off. So, I mean, it's quite possible you could get a snapback rally based on what? What would cause it to snap back? Why might the market go up a little bit tomorrow? And a little bit could be 300 points, right? 300 points is a lot of, it's a normal day would be 300 points. But compared to 3,000, that's only 10%. Short covering ahead of the weekend? Month-end window dressing? Profit taking on the shorts to cover? Sure. Now, are we going to go in blindly tomorrow and just start buying it with the anticipation that that's what it should do? What do you think? Buy the dips? Now there's value in the market? Well, we'll have to see what happens in the morning, and let's see if there's any news. Let's see if there's any news. You're not officially in bear territory. You're only down 10%. That's called a correction, by the way, for those of you that are market aficionados. It's called a correction. That's not bear market territory. Bear market is when you drop 20% or more. So you could easily get some snapback rallies here. It's not snapback 50% of that. Not tomorrow. Maybe over the next week or two. Let's see. Tomorrow's well, it's a leap year, right? So we actually have Saturday the 29th, right? Let's see if there's any news tomorrow. Yeah, I'm thinking up too, David. Yeah, crude's down big too, Kenneth. Crude was down at what, 42 today? Okay, so here's tomorrow's news. We got a PMI number at 645 shown as medium impact. You got some pre-market numbers here in Pacific time. Core PCE, personal spending, consumer sentiment at 7 o'clock. You know, normally these don't really rock and roll the market too much. It's only when a news bot, like a number's way off, it doesn't make any sense. The news bots will just jump right on it. All right, just for giggles and sim, do you want to go ahead and short YM? Short ES and buy gold? What do you think? Sell? Sell? Buy? What do you think? There you go. Now, was that proper trade entry? What do you think? On YM, where should we have shorted it? Let me give you a couple spots. Now, it might work out, but let me give you a couple spots. Let me do it like this way on YM. Let's use this as a guinea pig. If we were going to short this, would you have shorted it at position box A or box B? If we were going to really trade this like we should, okay, here, this is A. Kind of going off the rails a little bit here, but you know, I like working with live data. Should we have shorted A? I intentionally let it do this, by the way. Because I'm trying to make a point. Or B. B's not here. In a downward move, is B the thrust or the retracement? Let's do the same thing on SE. The A box would be here. Let me close this up so we get a little more chart to work with. The A box is here. Okay, if you're going to short these markets on the equity side and buy gold, should you have shorted A or B on both of these charts? Cast your vote. You've got 10 seconds. A or B? Eight seconds to cast your vote. A or B? Five seconds. A or B? And buying gold. So the reverse would be true. So A would be here on Goldie to get long, here at support, or up here. Which part is the thrust? If you're going up on gold, which part is the thrust? Now, A, obviously. A is the midband short. That was the retracement. B is the thrust, right? It's not a lot. It's after hours. It's big. You had 1,200 point day, so you know you're going to dink around here for a little bit after hours. That's to be expected. But I'm trying to make a point with some live data. And let me ask you this. And now that you're looking at it, we're all kind of looking at it together. How many of you always seem to get in at point B? So you're looking to short. Let's use YM and ES as an example. You're looking to short. You see it dinking around up here like this. You see it dinking around the midband like this here. You're getting ready to you want to short it. You saw that it broke. It's coming back. It's sitting right here. And you hesitate. Oh, look, it's breaking. You don't get in here. You short it right at the apex of the thrust down. And then as it retraces back up to where you should have gotten in, you get stopped out. How many has that happened to you? Anybody? Show of hands. You're doing exactly what I'm showing right here. Got to lay it on gold. You missed the support bounce. You short the apex of the bottom down here. Now you're upside down. 140 bucks, 175 bucks. You got your stops up here. If you got in up here, you would have already had a scalp. Now you're bleeding to death. Bleeding to death. Oh my goodness, it's going to take the swing out. You got to be kidding me. Oh my goodness. What am I going to do? And then now watch. Now let me ask you this. Would you reverse it? Are you going to short now? You're going to close it and short up here and eat the 200? Close it and short up here and eat the 200? Wait for it to come back? Flip it? You getting long here now? What are you going to do? Flip it? Uh-oh. Uh-oh, Big Jim. We got problems, Big Joe. Got to rake it in, man. What's the dealio? This happens to me all the time. I wait, and I pull the trigger, and sure enough, it's exactly right at the apex where it's sold off and retraces right in my stinking face every time I get into a trade. The market knows what I'm doing. They stop me out. I get whack-a-mole, and I don't get back in. How many in here? Show of hands. It's hard to do. It's hard to wait for those retracements. It is really hard to do. Look, I understand it. I fight it just like everybody else does. Sandra says it happens to me, but I try not to do it anymore. Matt says just hit the close button, take your loss like a man, quit whining. David says, this helps me see it again. I got to remember to wait for those retraces. Right. Now, let me speak to a couple of things here. Now, that some swings are established. If you are shorting this resistance, which it just kissed and roll off of, right again, right there, right? Where is your target? Where's your target? Well, if you short kiss here, 20 ticks would be here. Wouldn't that be a nice scalp? So you really would have two targets. If you put a 2-lot on, we talk about that all the time, 2-lot. Now we're getting something funky going on with gold. Gold should be bouncing, but it's not. Now, is that going to portend an up move for the equities? This right here? I did this on purpose, by the way. What's that going to, what is it? Is gold the leader? Is this going to break up through here? What do you think? All right, so let's go back to our question. So if you take the short, as this is an example, your first target would be the midband for your scalp. And for YM, you're looking at least maybe 10, 12, 15 ticks. 20 is a lot. You would have already gotten a scalp off, and you probably have your stop here somewhere close to break even, okay? And then obviously you can see that there's another established swing down here, which would be your secondary target on a runner. You put 2-lot on, and you want to fade that area right down there. Right where this other trader got in, right? That's actually a short target. Now, is Goldie going to push these markets up through? Let's watch it. Goldie breaking hard. You want to reverse Goldie? Let's take a vote from the team. Type in an R if you want to flip it. Yeah, liquidity is very low. Flip it? Flip it short. Flip it short right now, gold. How many you want? Here, where's that reversal button? Get that reversal button out of here. Where is that? What do you say? Come on. Come on, take it with me. Flip it. No? Come on, that thing's tanking. We're missing it. Look, we're down 300. Let's take the bite and just go get in now. Too whippy? Wait for a pullback. You're too late. You should have flipped it earlier. Good. That was a trick question. What is this? What are we in the middle of on gold? A thrust or a retracement right now? Right now, what is it doing? If it's going to head down, it broke the support level. So do we short it here? Or do you wait for something like this? Up here, where it broke down and look to short a kiss and roll right here instead of a flip. What say you, team? Should the sell be up here? This thing's fighting me here. But what if it doesn't retrace? What if it just starts tanking? Well, let's see what range it's in. That's a good question. Let's see where it might get a bounce. Let's blow this puppy up. Well, the low of the session is all the way down here. So it is quite possible from here, if you flipped it, you might get from 44 to 42. That is about 20 ticks. And make about maybe 2/3 of this loss back. But the prudent thing to do is wait for a retracement. Now, it's after hours. It might just rip and tank. You'd be better off doing something like this, closing this out. Let's go back over here and see what. So here would be your target, obviously, right? You see these two swings down here? If you did happen to be short on this break, where would the target be? Right here. Right? Now you fade that, right? Yeah, it might tank, Maz. It's hard to say. Now your target's coming right to where your target would be. You want to fade that bottom right here. Let's see if it's pushing the equities up. Nope, they're going down too. They're back to where we got in. Yeah, so the correlations are not intact. So let me show this Goldie one more time. All right, so here is the open of the session. Let me just get you oriented. I just kind of jumped right in there. Some of you might be like, what in the heck is he looking at? Okay, so here is, I have this indicator. Gary doesn't put it in the room, but you could put it on your charts if you find it useful. Current day open, high, low, OHL. And so at the end of the trading session, the market pauses between 1:15 and 1:30 my time, which is this line right here. And then you have the open of the new trading session. So this dashed black line is the open of the new trading session here. As gold moves higher, it will push the blue dashed line higher. So when it does that, that's session highs. When the market comes down to here, the white dashed line is called session lows. So that's open, open, highs, lows. So in fact, if you had shorted the break here, which we could have because we got long here and we knew we were wrong, and we could have put a sell order right under here, and so you could have actually been short from here. It's obvious to see that your targets, you could have two targets. You could have a scalp target, like 10 ticks. So you pull one off, and then your secondary target is down here. Now you have two options. You can do a fixed target at a swing, like the low of the day. So in this case here, you would do a buy to cover. The other option is, let's say that you were short and you're doing a trail buy to cover. So let's just put a buy to cover trail on here as if we were in it. You can see that it's coming up to kiss here. So this would be probably stopping out your runner right here, right? That'd be stopping out your runner. So so what I'm saying from a target point of view, there's really three things you can do. Okay? One is scalp. Take the first 10 ticks if you can, which in this case would have probably been, depending on your fill, somewhere like right there. The second thing you can do is have a fixed target near a swing. Now, the advantage of that is that you lock your coin in because you're expecting a bounce there, right? And you're getting it. Now, in some cases, if, in this example, gold continued to tank, let's say that it just ripped right through here and another 30 ticks down, then the fixed target leaves a lot of money on the table, right? Because you missed this. But in this case here, it bounced, and that was actually a pretty good out. Because even with the trail, you would have been stopped out here, so you would have given at least maybe 9 ticks of it back. Everybody understand what I'm doing on the buy to cover? Fixed target near a known swing. There's pluses and minuses to it. Trail stop out. at line 2, right? All right, now we're retracing. How many of you want to short it right now? Cast your vote. Type in S for short. I'll just see how many votes we get. Put a sell order under here. What do you think? Now, if you did that, where's your stop? If you did that, where's your stop? Where would you put your stop? There, you just got filled short. And where's your target? Here, let's blow it up. This is all sim. We're just looking at live markets, playing around together. Feel free to chime in if you got an opinion. Tell me what you think. Where's your target now on that short? And where do you put your stop? You got to buy to cover. You're only in one. There's your buy stop right there. Okay, if you said just under 45, I like that. That's nice and tight. Well, that was a retrace, David. See it? You got a fresh low of the day. Here's the fresh low of the day. And you got a retracement right here. Now, did we want to get above a 45 and possibly get up near the midband? Yeah, we did. Did it go that far? Nope. So that's the retracement that we decided to take. Now, how many of you want to do a buy to cover right here on a fixed target? Or do you want to drag it down lower and see if it can break that low of the day? LL for lower level, 42 for 42. Cast your vote. 42, fixed target, or let it go make some fresh lows down here. It might not make any difference because it might stop out. Everybody wants 42. Good. Now, how many of you want to push the protective stop a little higher, say a tick or two above 45, in case it wicks this candle and then rolls over? How many of you would do something like this? Tell me if this is crazy. How about if you put a protective stop, two protective stop up here, and you short more when it hits here? How about that? Would any of you do that? That's called adding to a loser. Would you add to the loser? And then stop out if it goes 7 ticks higher? Now what would happen here is if it bips up and hits that 45, you're going to get a blended average between this and this. So your actual short now will be in here on a 2-lot. What do you think? Say you, team. Cast your vote. How many of you ever do this? How many of you ever add to a loser? Like you're expecting it to get up here, and so you're going to average up. What do you think about that idea? Like this. You really want it to get up here, but you don't know if it's going to get up there, so you go ahead and add another one right here. And if it bips up way up near the midband, you just go ahead and take the hit on the 2. It's going to fill it. You got to make up your mind. Sandra says, I only do it on the long direction for no good reason. Well, I'm just showing you different techniques. I mean, you know, you could do it on the long side. You could do it on the short side. Is adding to a loser a good idea? David McGee says, I sometimes I'll do this and it works, but sometimes if a fast-moving market, it can kill you horribly. Right. Brian says, I don't like this plan. Roger just typed in no. Sandra says, probably not. I don't like the fact you get bigger losses from Maz. GTFO, says David. No, nobody's really embracing my plan here. Well, you can see the inherent risk, okay, is that you take what could have been a small loser for $100 or less, and, you know, now you're doubling down on it, right? And that's a good point. I'm going to say that. That's a good comment, David, and that's why I'm doing this, is that when you double down like this, and I just know some people that trade it, and a few people are mildly successful with it, is that you're doubling your risk. You're doubling your risk of a potential loss. Okay, now you're down 2. So each tick up now is going to be twice the pain. The way this should normally work is, if you found a good proper entry, the trade should move in your favor immediately and should give you a scalp and allow you to get a break-even target very quickly. And then if you don't get the scalp in your target, you just get out of it. That's the way we teach. We don't teach this. This is really not the proper way to do it, is it? Now, if it gets all the way up here, could it kiss and roll here? Sure. Let's just for giggles go back over and see what the equiti are up to. Okay, they're bouncing. And I can't remember what we were on. Are we short? Yeah, now anybody want to buy ES on a break here? Since we're short gold? What say you, team? How about Wyoming? Wyoming came all the way back from down here. Look at that bounce. Whoa. Are we short? Let me get my, hold on. Let's get our position thing up here. Hold on, stand by. Where are we at here? Okay, we just popped too long on SE. We're looking for gold to roll. Let's get our position manager here. Hold on. Oops, what's going on? We should be long, Wyoming. Are we long? No. And we want to be long and short gold. Oops, I think I had a sell order here. That should have been a 2 buy order here. So we're long ES, long YM. Here, let me get my position manager on here. That's throwing me off. Stand by. There we go. That was on another screen. That's a lot better. All right, what's going on here? Hold on. Better to shoot like a mouse than an elephant. All right. There we go. Hold on. Stand by. Now, in terms of targets, since we have the 2 lot on SE here, and we're up 175, where should we be looking to take profits on that on at least 1 lot? Well, you should be maybe looking to take one right here. It's trying to break this swing, but where's the other swings at? Hold on, stand by. We got to peel 1 off on SE. So you got some choices. You clearly have a swing here. Do you want to take 1 here? If it bips up to 26 3/4, that's pretty tight. And would you have another one up here? Let me give you some options. Let me give you some A and B options. So you want to fade that swing, and then the high of the day is up here. So maybe you want to sell 1 up here. Fixed target. And how about here? If it pops through here, you want to sell 1 here too? What say you, team? A and B. A, scalp. B, target. High under the wick, Maz. High of the day under the wick. You mean right here? How many want to push B up? Closer to the high of the day. Oops, oopsie. What are you doing? Oh, you crazy thing. Get back here. Now let's take a look at the Wyoming chart. Goldie kind of dinking around here. She's not breaking yet. Need that 2 lot. You probably want to buy to cover. We got 2 on. Let's buy to cover 1 here. Let's buy to cover 1 here, and let's buy to cover 1 down here. What do you think? Does that look right? Let's see where old Wyoming could be going here. Well, you got another swing up here. We only got 1 lot on. I was looking for a pullback. I was hoping it was going to be here. How many of you want to take that Wyoming trade off right here? Just sell the one that we got right there. What do you think? Conservative on the yeah. See now, me personally on ES, I think trying to go for this extra couple of ticks is pushing it. Especially since Wyoming. So here's kind of what goes as I start to, and we're playing around in sim and it's after hours and slow liquidity and might not do anything. So we're just having fun here, okay? But let me just talk you through my thinking, okay? Is YM has already run up from when the BIP it made way down here, and it might get back to here, and we probably should have gotten in it somewhere around here. So we're getting in late. That's what I'm trying to say. Does it mean it's a bad trade? Not necessarily, but in order for ES to clear here and get up to here, then YM would have to do the same. YM would have to push through here, going up to its high of the day to correlate with ES. So it would have to do this. So you have two choices with only a one lot on. You can take the coin right here, just under that swing. If it bips up and gets it, you're not going to get much. You might get, okay, we took the one off. We took the one off on ES. It bipped our line. Now, where's our trail stop? Where's our trail stop on ES? We need a trail stop. Where are you going to put it? How many of you want at line 2? What do you think? Where are you going to put? We're long, so we want a sell stop. How many of you want a tick within break even? Okay, I'm going to do two things here. I'm going to do A, above break even. B, just below break even. C, down here at 62. A, B, or C on the ES remaining contract. Make a decision quick. We just pop one off. See, gold's killing us. A, B. Okay, we got a lot of B's, so B it is. We already got the scalp off. What are we going to do with Wyoming here? Oh, we're bleeding to death. We're upside down. What about Goldie? What's Goldie going? Oh, Goldie. You don't help on the side at all here, are you, Goldie? What should we do with YM? Uh-oh. Oh, yeah. Now, should YM bounce here? Well, we're looking at a number of factors. ES should hold right in here. 62. Let's give it a little bit of wiggle room. 62. Ooh, Wyoming breaking down and Goldie just stopped out. There you go. Get out of ES, right? Dump it. Yeah, higher lows. Yeah. So lesson learned, obviously, we should never shorted down here. We obviously see that. Then we added to a loser. That was 2 no-nos in a row. And then we put our stop here at the mid-band where if it's going to roll, it should roll right here. So what was the lessons learned? What was the lessons learned on gold that we can take forth into tomorrow and next week's trading? Let's just put it right on here while we watch these markets move around a little bit. Anybody want to add to YM here? Well, you could have done that. You could have done that, Maz. You know, actually the ES entry was down here, but we were looking at gold. Okay? Yeah. The entry was down here. So obviously you would have had much more than a scalp with this move right here instead of just from here to here, right? Anybody want to add to YM if it breaks up through here? Buy another one? It's popping through our entry. Buy another one? Just for giggles? Okay, sure. All right, let's start making note of some lessons here. Oh, and by the way, let's just for giggles, if these two keep heading up, we're going to go ahead and sell a gold. There we go. Okay. Good. Where are we at here? Rarely, if ever, add to a loser that is moving in the opposite direction of your trade. Right? That's one big takeaway on the gold. Everybody see that lesson? Everybody see that lesson? We got short down here, right? Got short at the apex of the sell-off. We did, which was the wrong entry in the first place. And instead of just taking our lumps, we went in and added to it and averaged down, averaged up, if you will. And almost never does that work. Okay, almost never does that work. So you don't want to do that. Right? And of course, the tantamount rule that everybody already knows is that you must be patient and wait for the retracement. In the case of the short, we'd be looking for entries that are around the mid-band short if we're trading to the downside. Likewise for a pullback to mid-band to bounce on the long side. Oops, let's do that. Okay, right. Patient and wait for the retrace. Now, in actuality, if we were over here dinking around with ES and YM, what we should have done here on Goldie is actually had a sell order right up in here or a box or something. But we're juggling a lot of balls. I'm trying to do some teaching at the same thing. But you could be pulling off. What I'm saying explicitly to be clear about this is that the short on gold was when it wicked here, and that your target, your first target, if you put a 2-lot on, would be mid-band. And then you have a target here. So you only have 1 lot on. We can take it off quick, or we can fade down here. Starting to get a move in our favor so we're going to buy to cover down here. If I'm going to fade that a little bit on our Goldie short, right? Looking for that to break down here, down here, down to here. Getting a little bit movement up on our YM long trade. The better entry was down here. Everybody sees that. The better entry would have been when she was sitting right on the mid-band, right here. We actually took a little bit of a break up when it broke up through here. Okay, you're taking out this swing on ES. How many of you want to move the ES stop up? ES stop coming up. Where do we put the ES stop? Move the stop on YM. Good call. Good call. Right on. How many of you want to put let's see, we're long, so we got a sell stop. How many of you want to do it under that swing, or you want to go tighter all the way up to line 6? There's a trail. Okay, get the ES stop up. There you go. How many of you want to move this gold target down a little bit? Think she's going to get that swing down there? Okay, do we have a target on YME? Got our stops in. Okay, we got free trades on now. Can't lose money. We need, what are we missing? What are we missing, anybody? What's missing on these charts? What do I need to do? See, I got a target on ES. I've got a stop on ES. Do I have a stop on gold? Where's my stop on gold? Oh, I need a stop on gold. I'm short. I need to buy to cover. Where are you going to put the stop on gold? Help me out here. Help me. Anybody? Give me a number. What are you going to do? Where's the stop on gold? Help me out. Give me a number, somebody. Anybody. You want it here? You want it behind the entry? You want it 5 ticks under the entry here? You want it right there, 44? Give me some numbers. Help me out. I need a stop. What just happened? Oh, we stopped out of YME. It was too tight. Ah. Nah. 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 I wanted to move it. I wanted to put it right here. I hate that. How many of you want to pull this ES target down? Give me a number over here, anybody. I'll take a vote. How many of you want to fade it down into here like that? 71. How many want you crunch the stop up right here like that? How many want to tighten the noose around gold? Huh? Bring the target up a little bit. Bring the stop down. You want to tie it up a little tighter? You like that? See it? See how you're noosing it in? Stops out here, you make money. Stops out here, you make money. There's the swing right there. We're out of YM, so we just need these two right now. We're out of those. I didn't really plan to do this way, but I suppose it's working out okay. At least getting some movement. A lot of times you'll sit here and stare at it after hours, and it'll just like won't move like 3 ticks. You just be staring at it all night long. At least we're getting some kind of move. All right, let's getting some votes on the ES stops. I've got Maz at 67. I've got another one at 67.75. Oh, you want it tight. So I'm looking for two things here. I'm looking for a number for a target on ES. You can clearly see we have a swing established here, and the high of the day is here. Now you can do a couple of things. It's coming to get 71. You want to drag it out of the way a little bit, put it up here where Maz wants it. It would help to see what old Wymie's doing. I can't believe I'm kicking myself on that YM. That was too stinking tight. See, look at YM still going. This was the entry right here. Put that YM stop right too tight. See the wick? See that wick got it. I should have had it right under here, right here. See, it was way too tight. Okay, Goldie, what you gonna do? All right. How about okay, I'm just getting some feedback from Maz. David, test of the yellow line, 66, 67. All right, how about we tighten the noose on Essie? I don't know if she's going to get that number up there, so I'm going to go right here, and then I'm going to go right here. Some of you are saying 67. So now you're tightening the noose. Tightening the noose on Goldie, too. See it? What I mean by that, I don't mean you're physically restraining the instrument. I'm just saying tighten the noose, meaning that you don't have loose. There. Okay, gold just stopped out. Now see what we did there? See how we managed it when it moved in our favor? So just to be clear, the kiss and roll short was off the mid-band. We got in a little bit late. Part of the reason we took it was because the equities were moving up, and we expected a little bit of a down move on gold. So we weren't surprised when that happened. However, you can see that it's pretty range bound. So the short entry was up here. If we had put the 2-lot on, you got your scalp off here. We had another buy to cover just above the swing. We were fading the swing down here at 42 by 6 ticks. It never got it. But one thing we did is that the short was up here, but we got in late, Michael. Remember? We didn't get filled till down here. I missed that. I was over here thinking around with ES and YM, and I missed that short. That happens. But, could you have had a sell order up in here? Yes. Would you have taken the scalp off here and put your fixed target here? Yes. We tightened the noose on it. It locked down maybe, 8 or 9 or 10 ticks when it was all said and done. It could roll and get that target after all anyway, but we got to remember to take it out since we're not using Object Trader, which would be the OCO. So it would be all clean and taking care of itself. So we didn't get that top. We had 71, if you recall. We had 72, and then we put it under the swing here. When it doesn't get there, you tighten the noose on it, meaning that you drag your stops up tight, and you tighten the target. You're essentially, what you're doing, if you think about it, when you have something like this. Let me explain this a different way. When a trade starts off and you're looking for good movement, you leave your stops loose, and you put your targets wide. You're casting a large net, right? But then, when you get the market move in your favor, you don't want to give it all back, so you crank your stops up nice and tight. And it's clear that you might not get that 71, so you go ahead and there we just stopped out. Okay, we're out of gold, we're out of YM, we're out of ES, we're flat. All right, so you got to remember, just go back, make sure you cancel all orders. Let me go over here. Everybody knows how to do that, right? Go over to orders. Everybody knows to do that, right? This was all sim, but you got to be safe. Since you did all that yourself, you did put in your orders and your targets and your stops and all manner of things like that. You want to click cancel all orders, just in case there's something on a chart you missed. Okay, positions are flat. So we learned not to add to losers here on gold. You don't ever short or take a long on the retracement. You got to wait for the pullback. Ideally, it could be either a retracement to here or a deep retracement. This isn't a mid-band, that's a deep retracement. My apologies. You were looking for a breakdown because the equities were heading up. You were looking to get long ES and long YM. Ideally, the entry on a pullback on YM was here, if you recall, because you had several chances to get in YM. Would you have caught this one? I don't know. At the time that this formed, I think it was uncertain. It wasn't really until after this thrust right here that you knew that you could have started taking mid-band trades like that. And actually, the first bona fide entry, I would say, would be right here. And we didn't get in until up here. So we got sort of the tail end of it. But when YM behaves herself, mid-bands are pretty good trade entries. We got in late. We didn't get till a break of here, I think it was. And so we got sort of the tail. And I had a stop that was way too tight, and it got wicked out right here. So I actually missed this leg of it right here. ES, we did okay. The more ideal entry would have been here. I don't think we got long until somewhere up in here when this broke. So it was a little bit of a thrust. We kind of broke a little bit of rule there. But we did learn how to tighten the noose around the trade. We showed earlier that you begin with loose stops and loose, sort of aggressive targets, if you will, near swings. And then when the market reveals itself to you in terms of what it's really going to do, not what you think it's going to do, you pull your stops up tight, you pull your targets in tight, and you tighten the noose, so to speak, so that one or the other pops and you wind up with some profit. Yeah, I'm glad we got a little bit of movement here. I think sometimes it's better to do this than to look at static charts from what happened in the morning. So hopefully this helped to see it live, actually doing it. Of course, it was in sim. We didn't make or lose any actual real money. It is good to do this if you have a chance. After hours, after the market closes, you can put micros on if you feel like you want some skin in the game. It's only $1.25 or 50 cents a tick. Radon says, I love the live demos. Do these again. Okay. Yeah. I'll do it next Thursday if you want. If the market's moving, we'll get in and do the same thing. Put the correlation charts up. Pop a few sim trades in there. Have some fun. But this is the kind of practice you can do. And, if you think it's too much to juggle 3 charts, part of the reason I like having YM is that, excuse me, hold on. Sorry about that. Let's look at this move up here in terms of its timing in relation to the move up on ES, and then we're going to wrap. Let's see if I get a little bit more ES chart up here. So you can get sort of an understanding of what's really happening here. You can see in this case, for the most part, YM is almost always the leader. But the downside is that sometimes the retracements are deep. And they can. Hopefully, they don't let them confuse you. I used YM because it's a little smoother than Nasdaq. Nasdaq, these retraces would be huge, and I've noticed that can throw people off sometimes, and it's too fast. So was this retrace correspond? Let's just look at what just happened. Does this deeper retracement correspond to the wicks of these candles on a pullback here? By the way, keep in mind I'm doing an 8 range tonight. Normally this would be a 4 or a 6 or even a 2. Okay, so you would have much more bars and much more well-definement around the midband to get in. So was that entry? Let's look at the timing. Look at that. Got up and this would be in our target right now. Look at that. But let me show you what my point is here. when you got the apex of the sell-off here on YM, that occurred at 1728. That would have been 528 my time, right? And then you push up at 29, you pull back, you hold this 29, and then at 29.45, by 17:30, 5:30, you were already up here. Let's look at the apex of the sell-off here, 1729, 1728. This move up here was 30. So by the time 1730 happened here, let me just put this, annotate this with a circle. 1730 was actually on ES was actually right here, below the midband. By 1730 over here, you were already up here. So this circle on YM, ascending and turning the background green at 1730, was right here. This had already broken up. That's what I'm trying to tell you. This had already broken and was making its move up here. Could you have bought this circle long on ES? Yes. Yes. This was your early entry right here. That's what I'm trying to tell you. And that's why it's helpful to watch YM, because it can lead it by a minute or more. Would it have been much more advantageous to get this long trade down here versus way up here? Of course. This is huge. This went 58 all the way to 68 is 10 handles. You have been up 5 bones a contract by the time you got to here, and it went all the way to 72, 14 handles, 700. This latest pullback was this box right here corresponding to this box right here. This box at 1754 and change corresponds to the wick of this candle right here. Now, if I drop that down to a 6 or a 4, you would get much more pronouncement to see not just the wick of a candle, but actual where a box would have formed. So let's do that. Now, I hope I don't lock this up. I've had so much data here. I had to I had to reboot everything because there's just so much data bars from today. Let me see if I don't lock this up. If I lock it up, I'll just have to bag it. I do use Object Trader a lot, David L. I didn't do it tonight because I juggling 3 charts and trying to teach at the same time. It's hard to get all the boxes up and manage all that stuff like that. I just wanted to quickly just hit buy and sell orders in Sim just to jump in and show something. That's another way to do it, Maz. If you on your position tab with your open positions, you right click and you say flatten everything, and it'll take all your orders and everything will just be completely flattened. See, don't lock up on me here. Come on. If I can see those 4 bars on that pullback, get a lot more definition. Now, the reason I bumped the bar size up, and I think I told you on NASDAQ I actually had to go to a 20, is because if you go with a 4 or 6, there's like 9 million bars in 5 minutes. It's just too much data. It bogs down your machine. It affects all your ability to trade with other instruments. So here's the definition. The difference between a 6 and an 8 and a 4. There's that same box I drew on the wicks of the candles of the 8, or actually this right here. In this case, it actually encroached into the, band just above the midband. That was another legitimate long trade. This occurred at 1754 and 28. This bar was at 1754, 28. So this bar in this box corresponds to this bar in this box. See how they both broke up very precipitously? Let's see, did gold break? Yeah, gold's breaking down, so it's doing, the correlations are intact. Gold's going to go down and get, so in the end, we came within just a few ticks of our highs of the day on YM and ES. Here on that last push. And Goldie is just not quite at the low of the day down here, but it looks like it might possibly go get it. Goldie should, by all rights, be coming down into here. If the shorts are going to remain intact, the correlations stay intact. Goldie should bip down into that area down there. If you're short, look to cover down there. And then YM just missed the top with a double top just underneath of it, right here. See the contrast? You can see that the algos are moving very similarly, but the volatility is much more pronounced on YM. See the difference? What I'm saying is, look at how the bars look on this right here, and this is an 8. This isn't a 4. 4 would be much more pronounced. You'd have twice as many bars of that versus that circle corresponds to this circle on the right. See the difference? And these two big circles correspond to more or less this big circle on gold. In the end, we see that our stop was just a little too tight. If we'd got in at the mid-band short like we talked about, you could have had a looser stop here at 45, in which case you would still be in this short. In the end, it might stop anyway, so it might not matter, especially if these equities start to go back down again. That's going to push Goldie back up here like this. Tafita, I don't really use. I mean, I see the value of the Lightning. I know Gary uses it a lot in his decision making and trading. I don't use it as much. It's something I look at in the grand scheme of things, but it doesn't really factor in my trading too much. And David, I think I answered your question about OT. Yes, I do use OT. I just didn't use it tonight for the purpose of the demo here. Yeah, and I explained why I used YM instead, and NASDAQ as a leader. Okay, I think that's it. Let me stop the recorder. Ran a little bit over, not too much.